This is a podcast from the Business Times.
Good evening. It's Tuesday, July 28th, 2026. Here's your market-focused daily closing bell update by the Business Times. Asian shares fell today, with semiconductor stocks leading the sell-off as investors questioned elevated AI valuations in the face of growing competition from China. At the same time, lower oil prices renewed focus on the possibility of U.S. Federal Reserve rate hikes, weighing on broader market sentiment. South Korea's Kospi slid 11% to 6,012, marking its lowest level in 3 months and triggering a circuit breaker. The benchmark is now headed for its biggest monthly drop since the 1997 Asian financial crisis, having surrendered more than one-third of the gains accumulated during its threefold rally over the past year. Leading the decline were the memory heavyweights, SK Hynix and Samsung Electronics, both down over 12%, as leveraged positions unwound rapidly. Japan's Nikkei also fell 3.95% to close at 62,364, with semiconductor names like Kioxia and Tokyo Electron remaining under heavy pressure, falling 18% and 11% respectively. Market sentiment has deteriorated amid fears that China's accelerating progress in AI and chip-making technology could erode the competitive advantage of established global semiconductor players. Those concerns were amplified after Chinese memory chip maker Changxin Technology Group, or CXMT, jumped 466% on its market debut yesterday in Asia's largest IPO of the year thus far. And reports indicated that China has begun large-scale production of domestically discovered deep ultraviolet, or DUV, lithography equipment. In Greater China markets, stocks ended today's session on a mixed note. The mainland Chinese CSI 300 index dropped 2.83%, as a steep 6.33% sell-off in technology shares weighed heavily on the index. Hong Kong bucked the regional trend, with the Hang Seng index rising 0.36%. Moving to commodity markets, Brent crude extended yesterday's sharp losses, falling another 1% to $87.19 a barrel, as markets welcome signs of easing tensions between the U.S. and Iran after Washington suspended its 2-week airstrike campaign on Tehran over the weekend. Investor sentiment was also supported by President Donald Trump's comments that the U.S. was holding good talks with Iran and that a deal remained possible. However, geopolitical risks remain, with reports indicating that Tehran carried out drone attacks on Saudi Arabia, Jordan, and Iraq earlier yesterday. The easing in geopolitical risk drove the benchmark 10-year U.S. Treasury yield about 4 basis points lower to 4.64% on Monday. The U.S. Federal Reserve is widely expected to leave interest rates on hold when it concludes its policy meeting on Thursday. Investors will instead be parsing the Fed's guidance for signals on the policy outlook, with markets currently anticipating a 25 basis point rate increase in September. Finally, shifting our attention to Europe, markets opened broadly higher as investors shrugged off the technology-driven sell-off in Asia and instead focused on the latest corporate earnings and falling oil prices. The Pan-European Stoxx 600 climbed 0.2% in early trade, while Germany's DAX and London's FTSE 100 both posted modest gains at the open. Dutch chip-making giant ASML remains under pressure, slipping another 2% in the open after yesterday's 8.5% plunge as concerns persisted over reports of China's advancements in homegrown DUV lithography technology. That's it for today. For more business news and market updates, visit bt.sg. And Lens on Daily for the latest tomorrow at 10 a.m.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.